this. Adam Cole is head of global currency strategy at RBC Europe and joins us now live. I'll put that question to you now. Has the role of central banks actually changed, and what's brought on this change?
Well, I think certainly the concerns on central banks' agendas has changed as we've gone through a 3-month period where the balance of news flow on the macroeconomy has shifted from upside inflation surprises to downside growth surprises. So supporting growth has moved up agendas and fighting inflation has moved down. So I think central banks are merely responding to the changing dynamic in the news flow that we've seen recently.
Yeah, but there seems to be this real fight at the moment to go as low as you possibly can. Some people are going to win that one, some people are going to lose out. What sort of timescale are we seeing where these interest rates are going to be so low, 2013, 2014 and beyond?
I think even for the central banks that will move relatively early, we are now talking well into 2012 before we see any further conventional monetary tightening from here. And obviously for the lagging central banks, the Bank of England, the Fed, well into 2013 in line with the Fed's own commitment. So prolonged period of very little dynamic from interest rates.
Interesting to see what's been happening in Switzerland today. The Swiss franc actually falling. We haven't seen that for quite a while, off by around about 1%. What is the central bank in Switzerland actually doing to precipitate that? Because thus far, it hasn't seemed to be able to do a great deal to move the market.
No, and I think on the policies that it's pursuing at the moment, it won't do a great deal to weaken the Swiss franc. I mean, what we're seeing essentially is, again, a central bank pushing interest rates down to and possibly through zero. Certainly the forward curve in Switzerland is now significantly negative. The problem, I think, is that investors' incentives for holding Swiss francs have never included yield or carry, and even the forward curve moving moderately negative probably isn't enough to take away the upwards pressure on the Swiss franc in an environment where markets are still significantly risk averse. The only tool I think that the SNB really has that genuinely would push the franc down is outright sales of Swiss francs in foreign exchange intervention. Now that hasn't been ruled out. It's still an option, but so far has not been used.
Adam, very briefly, we're coming to the end of our little conversation. We've got real worries about the euro, real worries about the dollar. We are focusing on gold very much today. To what extent is gold really the new currency?
I think it does trade effectively as an alternative currency now, and particularly so in a world where most conventional currencies yield almost as little as gold yields, which has always been what's differentiated gold, of course, from the conventional G10 currencies, is that it has no yield and currencies do. Well, currencies don't anymore in many cases, and I think for that reason gold is seen as a substitute currency now in a way that it wasn't in the past.
Adam Cole, fascinating stuff. Thanks very much indeed for joining us today from RBC Capital Markets.